We don't have to imagine a world on the brink. Cities are bursting at the seams, conflicts are erupting worldwide, and our debt is spiraling out of control. This isn't some dystopian nightmare. This is our reality. But just like in all the times before, the world will find a way to overcome these challenges, and smart investors will find a way to capitalize on it. We're living in a time of radical change and massive upheaval, where there's a real-time chess match between the East and the West that's reshaping our global monetary policy. Governments are drowning in debt and printing money like never before, all while nations scramble to secure critical resources. With few options left, governments are going all in with massive deficits, stimulus, and have started to cut interest rates. They're desperate to solve everything from climate change to urbanization and power grids. But these moves won't magically increase commodity supplies, solve demographic issues, or end global conflicts. We're at a crossroads facing problems we've never seen before, and basic economics tells us if growth can't keep up, neither will taxes or incomes. So what happens next? Prices keep rising and the shortage intensifies. We're burning through commodities at a staggering rate, over 2 billion tons of metals every year. That's more than 500 Eiffel Towers worth of mined materials in a single day. And it's just the beginning. We're entering a new era of production driven by breakthroughs in AI, automation, and robotics. We can build faster and more efficiently than ever before. But here's the kicker. Without essential commodities, even the best technology can't build anything real. We need more raw materials, and we need it fast. Have you ever heard of the Fujiwhara Effect? It's when two hurricanes start spinning around each other and eventually merge into one perfect storm. Why mention hurricanes? Because right now, two powerful forces in our global economy are on a collision course. On one side, there's the political drive to combat climate change, spark the AI revolution, and fix the housing crisis. On the other, we are facing a serious shortage of essential materials like copper, zinc, gold, and silver. These forces are colliding, driving up commodity prices and setting the stage for a major economic shakeup. For example, over the next 20 to 25 years, the world will need to produce as much copper as has been mined throughout all of human history. Copper is crucial for electrification. Without it, decarbonization is a pipe dream. And it's not just copper. We're facing massive long-term demand for lithium, graphite, and cobalt. Politicians love to talk about boosting domestic production of critical minerals like rare earths. But here's the blunt reality. The Western world simply doesn't have enough mines to meet the demand. Vital energy and mining projects are underfinanced and tangled in red tape. Germany's a prime example. They phased out nuclear power in 2011, not realizing it would come back and haunt them. When Russia cut off their gas supplies in 2022 after invading Ukraine, their energy crisis hit a boiling point. The material world has constraints, while the political world has ideals. When they're both out of sync, we all pay for it. Our cities are growing like never before. Mass immigration is overwhelming infrastructures and fueling a housing crisis, especially in developed nations. Like a crowded house bursting at the seams, overcrowding and skyrocketing house costs are squeezing communities from Portland to Philadelphia to Toronto. The solution? Build more. But building more isn't just about laying brick. It takes a huge array of resources, and we're hitting a supply crunch. These are material constraints that political promises and ideals can't fix. Without adequate supplies of essential raw materials, our ability to power our future safely and sustainably is in serious jeopardy. Artificial intelligence is driving unprecedented growth, but it's incredibly energy and resource intensive. Training large language models consumes vast amounts of electricity and water. Software like ChatGPT uses 25 times more energy than typical searches. A single conversation uses about half a liter of water. And guess what? Over 180 million people use ChatGPT monthly. At this pace, AI could account for up to 3.5% of global electricity demand by 2030. That's equal to the combined energy consumption of both the forestry and agricultural industries. And as AI data centers continue to expand, the demand for uranium, the primary fuel for nuclear energy, is rising, and utilities are scrambling to secure it. Elon Musk warned that we're heading for a serious electricity and transformer shortage next year. Will this chip rush be bigger than any gold rush? Meanwhile, NVIDIA plans to ship 1.5 million AI servers annually by 2027. If these servers run at full capacity, they'll use over 85 terawatt hours of electricity, more than many small countries. And it's not just about energy. Location matters too. Major players like Microsoft, Google, and Amazon are struggling to find land for these enormous data centers and infrastructure needed to power them. As we deal with the potential risks of AI, we need to fully understand how it will reshape our environment, our domestic security, and therefore our future. As trade routes strain under mounting political pressures, a new battleground has emerged over rare earth metals. Think of rare earths as the vitamins of modern technology, small in quantity, but essential for everything from smartphones to electric vehicles, advanced robotics, and military systems. You can't run a marathon without the right nutrients, and we can't power our future without these critical materials. Take this for example. A US F-35 fighter jet contains 920 pounds of rare earths. Electric vehicles hold 1 kilogram of rare earths, and a wind turbine can have up to 2 tons of rare earth magnets. Not only does China control 70% of global production, but they control 90% of processing. To maintain their market dominance, China banned the export of its processing technology in 2023, and other Asian and African nations have started to slam the door on unprocessed mineral exports. This chokehold has the West scrambling and fighting back with incentives and tariffs. The consequences? Potential price spikes and supply chain disruptions, especially for the auto industry. So, Western auto giants are cutting out the middleman and going straight to the source, inking deals directly with mining explorers and producers. Tesla, Ford, GM, and others aren't waiting for disruptions to hit. They're locking down critical minerals now to keep production lines running. The US Department of Defense is also securing supplies on the home front. They've invested over $439 million since 2020 to build up domestic supply chains. In this high-stakes race, securing at-home sources of rare earths isn't just smart. It's essential for powering industries of the future. The shift to EVs is driving unprecedented demand for critical metals. By 2030, lithium demand is expected to surpass 2.4 million metric tons, more than double the projected demand for 2025. And that number could skyrocket over 40 times by 2040. This explosive growth underscores lithium's role in the global shift to a low-carbon economy. China's booming automotive and renewable energy sectors are leading the charge, but North America and Europe are close behind. The US alone is projected to see a 487% increase in lithium demand by 2030. And lithium isn't the only game in town. Nickel, crucial for EV batteries, is staring down a potential supply shortage by 2026. Palladium, essential for catalytic converters, is also at risk because of a tight supply and geopolitical tensions. Platinum is stepping up as a more affordable alternative for automakers. And let's not forget copper. EVs need 2.5 times more copper wiring than traditional cars. Meanwhile, graphite and cobalt demand is expected to rise 25-fold, driven by their roles in battery technology. Samsung's new solid-state car battery, set for mass production in 2027, could significantly disrupt the market and shift focus to a different critical commodity: silver. Electric vehicles use almost twice as much silver as internal combustion engines. Given global car production at 80 million vehicles annually, if just 20% adopt Samsung's technology, silver demand could soar by 16,000 metric tons, nearly 2/3 of the current global annual production. This rising demand for these commodities underscores just how crucial these materials are in shaping the future of energy and technology. As concerns over climate change intensify, governments across the globe are racing toward net zero emissions. But here's the catch. As we push for cleaner energy, we're facing a massive spike in demand for many mined minerals. The big question: Can we actually get where we need to be with the resources that we have? We need serious investments to make each energy source impactful on a global scale. And there's one source that stands out: nuclear power. Nuclear energy packs a serious punch in terms of density. It's cost efficient and has a high capacity factor, making it twice as reliable as natural gas and coal, and almost 3 times more reliable than wind and solar. Yeah, it has its challenges, but technologies are improving, and despite political resistance, atomic energy is essential to achieving climate goals cost effectively. Gold and silver demand is increasing rapidly, driven by aggressive central bank buying, geopolitical tensions, and a declining supply. All the gold ever mined in history could fit into a 22-meter cube, small enough to fill just 3 Olympic-sized swimming pools. Gold recently reached a new all-time high of almost $2,790 per ounce. Why? Because while the US has started to apply rate cuts, the market's reacting to deeper issues: liquidity problems, dollar devaluation, and the long-term costs of endless free money policies. In 2023, central banks bought a record 1,079 tons of gold, led by China, Turkey, and Russia. This trend is expected to continue well into 2025 and beyond. Meanwhile, silver is riding a parallel wave. The Silver Institute projects industrial demand for silver will hit a record 1.2 billion ounces this year, mostly fueled by investments in solar power grids and the continued rollout of 5G networks. But here's the kicker: the supply of both gold and silver is under serious pressure. Just like with silver, worldwide gold mine production is struggling to keep pace with major gold-producing regions like Southern Africa and Canada, reporting lower output. This underscores the urgent need for strategic investments in mining to prevent expected shortages. So with the AI boom, climate change, and mass immigration, how are governments going to pay for this? The transition to sustainable energy alone is estimated to require annual investments of about $5.8 trillion between last year and 2030 across 48 developing economies. That's about 19% of their combined GDP. Mining Watch Canada projects a staggering demand for 3 billion tons of mined metals and minerals to fuel the energy transition, prioritizing 6 critical minerals: lithium, graphite, copper, cobalt, nickel, and rare earths. Governments are trying to stimulate supply, but when they do that, they inadvertently drive up commodity prices. This will hit everything from the cost of building a house to the price of your next smartphone. Companies must invest more and dig deeper to find new ore bodies. And for this to happen, share prices must rise to spur investment, or companies have to receive government stimulus. Keep in mind that these 2 factors will create a feedback loop. Stimulus from governments push commodity prices and inflation higher, and greater demand for these materials drives prices up. Canada, the US, and Europe can drive change by creating jobs and boosting production in mining, forestry, and agriculture. This will strengthen supply chains, exports, and economic resilience, but cause prices to rise. There's a saying for this in the commodity market: the cure for high prices is high prices. As prices rise, producers are willing to sell more, explore more, and build more. It really is the perfect storm. But those who stay informed and adapt will find themselves ahead of the curve. There are ways to come out stronger on the other side. The mining sector is facing a once-in-a-generation opportunity, one that's finally starting to gain traction in the media. Consider this: the combined market value of the top 100 mining companies barely matches a fraction of the worth of tech giants like Apple or Nvidia. The world's building blocks are worth just a fraction of the products that wouldn't exist without them. As capital flows into the mining sector, it will arrive in 3 distinct waves. First, ETFs, for those who prefer lower risk through diversification. Number 2, specialist funds, for investors seeking higher leverage to commodities. And third, direct investments into stocks. And that's why we built Earthlabs. Earthlabs is the bridge between ETFs and direct investments, maximizing returns with smart, sustainable capital. Our goal is clear: to be the go-to option in mining through smart investments, cutting-edge global media, and strategic royalties. We're not just another mining company, we're a dynamic platform offering significant exposure to the junior resource sector. There's a few ways we do this. One of the ways is through investing. With over 40 million in cash and a proven track record, our founders have structured and exited deals worth over 300 million, creating over $1 billion in value. We also do it through our media and technology. We operate CEO.CA, the largest social platform for resource investors, alongside legacy publications, The Northern Miner, and modern platforms like mining.com and DigiGeoData. And then we also have a large royalty portfolio. Our influence in the sector is unmatched. Considering all of this, we're uniquely positioned to capitalize on future growth. This structure lets us manage capital efficiently without the pressure of redemptions, allowing us to generate more output across divisions. We combine smart investments with strong media and distribution, keeping us competitive in a perfect storm. With our comprehensive portfolio and unmatched reach, Earthlabs is perfectly positioned to capitalize on these global shifts. There's simply no one else like us. Join us at Earthlabs and be part of the next big wave in mining investment.